Hey guys, welcome to my channel. In today's video, I'm going to be sharing how to pick the perfect mortgage company that aligns with your dreams, your goals, and your potential. My name is Enrique. I'm a mortgage loan officer in Southern California, and I want to share this with you guys because it's a question I get very often, and I just recently switched companies. So I want to make an updated video for you guys going over some further things that I would recommend new people do when they're coming into the business and looking for a mortgage company to work for. So without further ado, let's get started. All right, number one is asking yourself, what type of loan officer do you want to be? Do you want to be a loan officer working at a depository bank like Wells Fargo, Chase, a credit union? Do you want to be a loan officer working at a direct lender? Or do you want to be a mortgage broker? So it's very, very important that you ask yourself this question, because why are you going to start, going out shopping for companies to work for, sending resumes, if you haven't first asked yourself, okay, which one of these do I want to be? Right? We want to narrow things down. And of course, do your own research aside from watching this video, because this is going to depend a lot on you. Right, where you are in your life, where you are in your career, where you are financially. Because all these, yes, they have certain benefits, but they also carry with them certain risks. For example, the mortgage broker, no one's going to be feeding you leads, and you're not going to get paid unless you close a deal. You're not going to have a salary, you're not going to have an hourly rate. So if you're someone that's not in a financial position to take on that risk, then maybe that's not the best option for you. So that said, let me go a little bit further into detail as to what each one of these consists of. So working at a depository bank like Wells Fargo, Chase, a credit union, this is going to be the least riskiest of the other two. I'm not saying there's no risk, I'm just saying it's less risky than the other two that we're going to go over. And that's because you're typically going to be paid a salary, you're going to have an hourly rate, right? You're going to clock in, you're going to clock out. They're also going to provide the leads for you. Right? People coming in to do withdrawals, deposits, etc. And so you're going to be paid the least compared to the other two options. But this is a great way to get started because you are going to have that pay there from the salary, from your hourly rate. You're not going to have to stress about not having a paycheck. Now, one of the setbacks of working at a depository bank is also that they're going to be very limited in the programs that they offer. Yes, they're going to have your traditional standard programs, but they're not going to be very flexible or offer a great plethora of programs, which is what you want, because if someone's coming to you for help, right, they're coming to you for a mortgage loan, for advice, for counseling, and you have to turn them away more often than not, you're not going to like that. And that's most often the case with these depository banks because they're very strict and they have very few programs. So you're going to be turning a lot of people away. Just the other day, I was on the phone with a good friend. They work at a depository bank, and a lot of the programs that I have as a mortgage broker, they've never even heard of. So that's another thing to keep in mind about depository banks. All right, next up is a direct lender. These are companies like American Pacific Mortgage, Guild Mortgage, New American Funding. These are financial institutions that specialize in just doing mortgages. It's not a depository bank where you can have a checking account or a savings account. They just do mortgages. So working at one of these direct lenders is another option for you. You will be an employee of the company, but for the most part, you are going to be paid more because in most of these companies, you're going to have the option to receive leads from the company and be paid less, or go out there and get your own leads. And another thing about being a direct lender is that the company is going to offer a lot of tools and resources for you to be successful. They're also going to offer a lot of tools and resources for your clients, because just like a depository bank, they're funding these deals and you're an employee of that company. So they want to make sure that you're trained, you got resources, you got tools to go out there and be successful. So it is, in my opinion, a better option than working at a depository bank. Now, very similarly to the depository bank, they're going to be limited on the programs that they offer because it's just one bank, right? American Pacific Mortgage, New American Funding, it's just that bank. And most banks carry anywhere between 4 to 6 different programs. And if you're just working at one bank, then you're just gonna have those 5 to 6 programs. Now, typically their guidelines, their restrictions are a little bit looser. They're not as strict as a depository bank like Chase, Wells Fargo, credit unions, but you're still gonna have some limitations there. And this is actually the reason why I decided to switch over to a mortgage broker, because I was getting all these clients, business owner clients with ITINs. They were coming to me for help and I wasn't able to help them because my bank simply didn't have the program. So they had to go work with the mortgage broker who did have access to the bank, did have access to multiple programs, and was able to get qualified through them. So I told myself, hey, I can't be missing out on all these deals. And that's why I made the switch from a direct lender to a mortgage broker. So let's go a little bit over that. So as a mortgage broker, again, you're going to be out there getting your own deals. You're not going to be anyone's employee. You're going to be working for yourself. And you're basically going to be connecting the client with the bank that offers the best program for them. Now, at my company, we have access to over 150 different banks. And like I said earlier, each bank has anywhere between 4 to 6 programs. So if you do the numbers on that, that's a lot of loan programs. As soon as I made the switch to a mortgage broker, in the very next week, I was getting deals. And I've been doing deals consistently ever since I joined because I have so many programs, so many banks that I can offer my clients. And that's something that's very, very important, especially if you're just commission, right? And if you're limited on the programs that you offer, it's going to be very, very difficult and you're going to struggle. And by the way, this is just my experience. I'm not saying you can't be successful as a direct lender or at a depository bank. I'm just saying what's been working for me. You're also going to be able to offer your client lower interest rates because it's a numbers game, right? You have access to over 150 banks. So there's a higher possibility that you're going to get your client a lower interest rate and they're going to love you for that. And another thing about working as a mortgage broker is because you are working for yourself, you may not get or have as many as the tools, resources offered by the direct lender or the depository bank. For example, at a direct lender, I had a bunch of marketing materials that was offered by the bank. At the company I'm at, we also have that, but at the direct lender, it was at a much higher level. But it is a bit of a trade-off, and you want to ask yourself, hey, is the marketing more important than actually having the deal? I told myself, hey, what good are all these tools and resources if I don't even have the program? It's no good. Those are the 3 options. You can make all of those 3 options work. That's just my experience that one's been my favorite, the mortgage broker, but you can definitely be successful as a direct lender and working at a depository bank. All right, number 2 thing that I recommend doing is simply asking loan officers that you know, hey, where do you work? Right? Let's say you've decided to be a direct lender. Reach out to any direct lenders that you know and be like, hey, where do you work? How do you like it there? What do you like about it? What do you not like about it, right? One of the best ways to get data from something or about something is a direct source, right? If you want to know something about someone, ask that person. If you want to know something about Bob, ask Bob, right? So once you've decided, hey, I want to be a direct lender or a mortgage broker or work at a depository bank, go and ask those people, hey, what's your experience been like with that company? But this is a great start because those people are obviously there for a reason, right? They're working there for a reason because it's working for them or they like it. And by the way, the company that I'm at is hiring. So if you want more information on that, there's info down below. All right, number 3 is looking for mortgage companies in your neighborhood. I don't know about you guys, but I know for me, especially here in Southern California with all the traffic, even if a company is 20 miles away, 30 miles away, in traffic, it's a 2-hour drive. I do not want to be driving 2 hours to and from work. I don't know about you guys, but not me. So I would recommend looking for companies in your area. Maybe go on Google and type in mortgage companies in your city, whether it be Los Angeles, whether it be New York, whatever. But look for mortgage companies in your area, direct lenders in blah, blah, blah neighborhood, mortgage brokers in blah, blah, blah neighborhood. And look at their websites. Do they have nice websites or is it an ugly, outdated website? Right? That's going to kind of give you an insight as to what kind of company they are, what kind of business they run, right? If they're outdated, if they're not into technology, all that stuff is important and stuff that you should look at. What kind of reviews do they have, right? Look at their Yelp if they have one, or look at their Google reviews. Look at their loan officers. How do the loan officers present themselves on their social media? Those are going to be people that can help you or not help you, right? So what type of loan officers are working at that company? Those are some things that you can look at as you're doing this Google search, right? Now, last thing, I wouldn't limit yourself if there are no mortgage companies in your area, because as a direct lender and even a mortgage broker, you should be able to work remotely. All right, number 4 is meeting with them, right? You chose your 2 or 3 companies, however many you chose. Go and meet with them, see what it's like, and ask them, okay, what do you offer clients? Right? What do you offer my clients? What programs, etc.? That's important information that you want to know because like I mentioned earlier, you don't want a client coming to you and you not having the program, you not being able to help them. So ask them, hey, what are your offerings to the clients? What are your systems for the clients? What are your tools that you offer clients, right? Next thing you want to ask, hey, what do you offer me, the loan officer? What tools, what resources, what training, right? And when it comes to training, here, I don't want you to be dependent on a person. If the company says, oh, hey, we have Bob that likes to train people, take that lightly because a lot of times Bob is going to be busy, right? Trust me, I've seen it a billion times with loan officers and real estate agents. They join a company because they've been told, hey, Bob is going to help you out. Bob's this, Bob that. And then when it comes time, Bob is busy. So don't be dependent on a Bob. Be dependent on certainties. You want to build your business on certainties, not uncertainties. For example, at my company, I wasn't dependent on a Bob. I wasn't looking for a Bob because I knew Bobs do not exist, Bobs do not work. For my experience with loan officers and new real estate agents that go to a company for a Bob, Bob's never there. So what you want to do is look for certainties. At my company, they do weekly trainings over Zoom, and if you can't make it, they record it and you can watch it on their library. There's about 5 to 7 weekly trainings. They record all of them so I can watch them whenever I'm free. I can watch them whenever I like, right? I don't have to depend on, hey, is Bob ready? Hey, is Bob available? Hey, Bob, can I call you? None of that. They do weekly trainings and I watch them on my own time. So things like that, build your business on certainties. All right, the next thing you want to ask or observe about when you're at these companies is, are they innovative, right? Do they embrace technology? How's the culture like? All these things are important too, right? Hey, tell me about your company. Ask them to tell you about the company, right? Is it great? Is it bad? What do they offer? Blah, blah, blah. All right, number 5 is going to be compensation. Now notice how I left this last. I'm not saying it's not important, but I would say the other things are more important than this, right? What if you're at the wrong company that doesn't offer loan programs for your clients? What will the compensation matter? Now, this is up to you guys and your lifestyles and what you're looking for. Be more interested in the opportunities than the money. Because if the opportunities are there, the money will come. Like I said, for me, I left that direct lender because there weren't opportunities there. I didn't have the programs. I didn't have the banks, right? They were offering all these things to me, but without the programs, without the banks, there was no opportunity for me. So I had to go somewhere else. So go over this lesson. Like I said, the things that we went over earlier in this video are more important. And that's pretty much it for today's video. Thank you guys so much for watching. I appreciate your time. I love you guys. Any questions, reach out to me. Also, again, we are hiring. So if you want more information, my info is down below. Reach out. I'm happy to help. Thanks again so much for your time. See you in the next video and be great.